Hi guys, welcome back to my YouTube channel. My name is Abidemi Abbas. If you're new on the channel, please subscribe and hit the like button. Right, so this is a part 2, a continuation of the video I did about Forex, what to know about Forex and suicide. So Alright, in the previous video, we've been able to establish the difference between the risk seeker and the risk averse. So if you missed that video, you need to go back and watch, the part 1 and get to know more about the risk seeker investor and the risk averse investor. Now, moving forward, if you're that risk seeker investor, then there is even more danger ahead for you, trading the Forex. And you need to be aware of this danger, in order for you to avoid suicide, and in order for you to be able to maximize your well-being while trading Forex. Now let's move ahead. So I categorize Forex trading into two. So the first one is the part that I call the currency exchange, and the second one is that part that that is the CFD. So if you use your Google search right now and try to Google Forex, I can guarantee you the first thing that comes up on your browser is gonna be that page, full loads of brokers. And I can guarantee you what those brokers are pushing is the CFD. So now CFD means contract for difference. So now before we go deeply into what CFD is all about, I first of all want to talk about the currency exchange. Right. So what the currency exchange means, you're actually dealing with two currencies, swapping one currency to the other. And mind you, if you're dealing with a currency exchange, you're actually dealing with real money. You're dealing with the assets, the proper liquidity, and that is mostly for transactional use. People that want to change money from one currency to the other. So now let's put in an example. And please mind you, in this episode, we're going to be talking about, numbers. I don't want you to get bored about those numbers. Don't be intimidated with the number. It's just a simple arithmetic, and I'll try as much as possible, to condense those numbers, to make it more user friendly, if that's the right thing to say. All right. So let's now, for example, let's say you've got 10,000. Let's use the GBP USD currency pair. So let's say you got 10,000 pounds that you want to convert into USD. All right. So let's say you're trying to try to profit from the Brexit that is going on in the UK right now. So let's say your speculation is the fact that there's going to be a no-deal Brexit. So if you're speculating on a no-deal Brexit, that means you expect the value of the pounds to go down, right? So let's assume that you're buying the pounds, you're buying the dollars right now at the rate of 1.35. So that means you're converting a $10,000 into a 10,000 pounds into the US dollars. So now this is what we're gonna do. We're gonna do a little bit of calculation right here. So if you're converting 10,000 pounds to dollars at the rate of 1.35, so that's gonna be 10,000 pounds times 1.35. So that's gonna give you $13,500 in your pocket. That's your money. Everything is your money, the actual money, the liquidity, the assets. The money is the asset that you have right now. You own all of it. 13,500. So now let's imagine you're speculating for a no-deal Brexit. You expect the pounds to go down in value. So that means, let's say your target rate is 1.10. 1.25. So now what you're going to do, you're going to do $13,500 divided by 1.25. So that's going to be 13,500 divided by 1.25. Now that's going to give you a value of 10,800 pounds. Now remember, you converted 10,000 pounds to dollars. 13,500. Now you're dividing it by 1.25. So your initial capital was 10,000. Now you're having back 10,800. So your profit is now 800 pounds. That's a whooping great profit. That's like 8%. Cash on cash. Your cash on cash return now is 8% profit. That is so good. All right. Now let's now go back to reality. The UK and the EU, were able to create what they called a good deal. So let's now assume, the price goes, against your speculation. So let's say, for the sake of clarity, the price now goes all the way up against your speculation because of a deal, a Brexit deal. So let's now say the price goes all the way to 1.45. So remember, you are $13,500. Now you're now going to divide that by 1.45. So now that's going to give you a value of 9,310 pounds. So now if you consider this, you had initial value of 10,000, but now you're getting a 9,310 pounds. So that means you're actually losing money right here. So what you're going to do is you're going to do 10,000 pounds minus 9,310 pounds. So that means you've lost a value of 690 pounds. So your loss right here is going to be 6.9% cash on cash value. So you've actually lost 6.9% of your value, and this is now you have a leftover of 9,310 pounds. So what you've done right there is you've done a currency exchange from one currency, the GBP, to dollars, and you converted back the dollars. You converted the dollars back to the GBP for you to be able to lock in your profit or loss. So that's a proper currency exchange. That's you owning the actual value, all of the money, and you having access to the whole assets, the money, the liquidity entirely. Now let's go to CFD. So now the CFD it means contract for difference. It is a very, very sophisticated instrument. It is very, very dangerous, and you need to know what you're doing. So for CFD, you need a technical know-how. You need to know what it is that you are doing. Then you need to to be able to get yourself a very, very good broker. So the standard of a broker that I normally use is a broker that has been in business for 3 decades. That's my metric. I want you to be in business for good 30 years. So if you've been in business for 30 years, then that's a go-to broker for me. Then you need to understand that with a CFD, you can actually lose all of your account value. You can actually lose the total value of your account with a CFD. That means your account can actually go to zero. Then with CFD, you need to know that your account can even go from zero to minus. Now this is not just you losing money. Now this is you owing your broker money. So that is you being in debt. That is how deadly and dangerous this instrument is. And remember from the previous episode, so I was trying to actually create the connection on why people tend to commit suicide while trading Forex. Now imagine somebody who has no, who has no prior knowledge about, them losing the whole value of their accounts, and even them going into debt to the extent of owing their broker money. So imagine someone who has a risk personality, a low risk personality, trying to trade Forex, losing all of their money, and even ending up owing their broker a lot of money. Such person could actually go ahead to commit suicide. And the essence of this video is for you to understand, what it is that you're doing, so that you can be safe out there, knowing fully well that it is, you're the type of person that can actually trade Forex. All right. So now going, the CFD instrument is actually a very, very complex instrument. I'm gonna make, a new video entirely on, how to completely use the CFD. So I'd like to have your comments in the comment section below if you're interested in me making that video. But for the sake of this video, I'll try, to try and summarize, the CFD and try to create a picture of how it's being used. Now this is how it works. So the same trade of 10,000 pounds to get dollars at the rate of 1.35. So that's going to be $13,500. Now let's assume you are speculating based on a no deal Brexit. So if you're speculating based on a no deal Brexit, that means you expect the value of the pounds to drop. You want the value of the pounds to drop, and let's say you're hoping for a 1.25 target. So you're going to do 13,500 divided by 1.25, the same thing we did earlier. So that's going to give you 10,800. So what you do, so the position that you controlled was 10,000 positions, because that's the 10,000 USD to dollars at 13.5. Now here is where it becomes interesting. Your own cash value. Now look at how interesting it is. You're able to use 300 pounds to make a profit of 800 pounds. That is so magnificent. So now if you calculate your cash on cash return, so that's gonna be a 266% return. That is so good compared to the currency exchange from earlier. So the currency exchange, using the currency exchange, from earlier, you're able to get 8% cash on cash return because you own the whole of the 10,000 pounds. But with the CFD, you don't need to own 10,000 pounds. All you need is 3% of 10,000 pounds, and that is 300, and you're able to make profit of 800 with just 300 capital. So that's like 266 cash on cash return. That is so great. So a risk seeker will be so interested in that, and they would even really to actually increase their leverage and increase their lots. And this is not a very very wise thing to do, except you're a bit technical about that. Now let's look at the catch. So that's the profit. So now imagine if the market goes against this investor. So we're going to use the same value like earlier as well. So that's going to be, so if the market goes against this investor, that means the market goes from 135 goes all the way up to 1.45. Now that's the UK has got a deal with the EU, and definitely the market is going to rally. So let's now assume the market goes to the price goes to 1.45. So now all you're going to do is 13,500 divided by 1.45 like earlier. So this is a loss. So this you're getting back 9,310 pounds. So this is a loss of 690 pounds. So now look at how deadly it is right now. So you had 300 pounds, in your trading account. Now you've incurred loss of 690 pounds. So from that loss, you've actually blown your trading capital. Now your account is gone from 300 to 0, and now to minus, from 0 to now minus 390 pounds. So you've not only lost the whole of your trading capital, now you're even in debt. You're minus 390 pounds. So now you're owing the broker 390 pounds that you need to pay out of pocket to the broker. So imagine someone who's a risk seeker. Some people try to, go all the way to over leverage themselves to the point of danger. And now this is where it becomes really, dangerous and scary. So imagine someone who's not just gone ahead to place a 10,000 trade, but gone ahead to place a $1 million trade. That's a minute of silence for that person. So imagine someone, losing a 690,000 pounds while trading the CFD market. It is, the CFD instrument. It is very, very possible. They are not just going to lose their trading capital, their portfolio value, but they're also going to go in debt. That means they're going to be owing the broker money. So imagine you owing a broker 690,000 pounds. That's a lot of money, and that's the reason why some people are committing suicide, because they've blown their account to the extent that they don't even know how they're gonna pay back the money. So if you've enjoyed this section, please try to click that like button, put a comment down below, let me know what you feel, and please try to subscribe. Please subscribe. My name is Abidemi Abbas, and thank you for watching. Thank you.